Okay, anybody that's serious about crypto, anybody that's new to crypto, now is the time to really stand up and pay attention. And it could be your last time because I'll tell you if I'm bearish, guys, and I get hate in the comments. I don't give a crap if I get hate in the comments. I'll tell you what I see in front of me as far as fundamentals are concerned, as far as time in the markets are concerned, and more importantly, as far as technicals are concerned. Now, guys, I'm bullish, and I'm going to show you why I'm bullish, and I'm going to show you how you can get an understanding of the market by looking at different markets and then understanding what we need to happen next. This is where fundamentals, guys, goes hand in hand because we need that driving narrative. And yesterday, I've done ICP, I've done XRP, and I've done Cardano. And I'd said in every single one of them videos, be complacent, don't panic. Now is not the time to panic. FOMC, guys, we didn't expect any rate cuts. The market had pretty much guaranteed that we weren't going to get any rate cuts. The market is forward looking. Market had already pulled back and the damage had already been done. So what is the market looking like now, guys? Everything that we need is at key support is at key support. The things that we need to be at resistance is at resistance. This is where the catalyst comes in. So let's go through. I've got all of your altcoin requests. We've got Bitcoin, we've got the dominance, we've got everything. So stay tuned. Let's dive in. We're going to go through so much in this video, guys. It's going to be a marathon, but by the end of this video, you're going to get a greater understanding of market cycles and how I expect this Bitcoin cycle to play out, how I expect Altseason to play out, and how I expect some kind of a mid-market pullback and the reasons behind that, guys. So what we're going to do is we're going to start with the Bitcoin chart. A lot of you have probably not seen this. Go back previous videos where I've analyzed where I think at the end of the market's going to be. It's not an exact science. However, this will blow your mind. I promise you that. So what I've done is I've got two measurements here. The two measurements are the previous swing low from the previous bear market to the bull market high. What I've done is I've measured that. So this is going back to 2015 and then this is 2017. So what that was is 152 bars, which in this case is 152 weeks. We're on the weekly chart. So that's 152 weeks from the previous bull market, the previous bear market low to the following bull market high. Now, next, what we're going to do is we're going to do exactly the same thing again. Look, there's the bear market low, there's the bull market high. So we measure the time period between the low to the high, 152 bars. So let's go on the next one. This is the current one. So there's the bear market low, and we pull it 152 bars because that's what the previous two cycles have done. Could be 153, it could be 151, could be 155 before all we know, but we need something to go by. So 155 bars from the previous bear market low to where we expect the bull market high to be around 13th of October 2025. Does that mean it's going to go up only until October 2025? It definitely doesn't, guys, and you will get a mid-market crash. I'm expecting a mid-market crash, and I'm going to show you exactly why. But first, let's get on to the second measurement. This is going to blow your mind. So the second measurement is the Bitcoin halving. Now, why is the Bitcoin halving important? Anybody that's been around crypto knows what the Bitcoin halving is. Anybody that's new to crypto, the Bitcoin halving is an event which happens during a certain period of time. It's a certain amount of blocks, which happens around every 4 years. And what happens is it costs twice as much energy to consume the same amount of Bitcoin, or if you used the same amount of energy from pre-halving, you would only get half the amount of Bitcoin. And why does that matter, guys? Supply and demand. So if the miners are spending twice as much on their mining equipment, their rigging equipment, just to get the same amount of Bitcoin, that means that's an additional expense for the mining equipment. If they use their existing mining equipment, they would only get half the amount of Bitcoin. So it's reducing the supply, but it's increasing demand. And what that does, guys, is it puts price up. Everything puts price up. So this is a clever mechanism, and I've built this into this scenario as well. So these are the previous Bitcoin halvings. So I've got 2016 here, June 2016. So I've measured that Bitcoin halving, and then I've measured it to the top of the cycle. What you get here is 78 bars. From the halving to the top of the cycle, 78 bars. Now let's do it again. This is the halving, and this was in May 2020. So we've measured that to the bull market high. Now what do you see, guys? 79 bars. The previous one was 78, this one was 79, 1 week's difference. So I've used the conservative 78 bars. Guess where that takes us? Exactly the same date as 152 bars from its bear market low. So can you see, guys, technical analysis does work. It's played out previously. Isn't this uncanny, guys? Doesn't this blow your mind? Between between the halving to the bull market high, 78 bars, 79 bars. If we had 78 bars here, that would be the end of the 152 weeks from its previous bear market low, exactly the same as this one, exactly the same as this one. So how could this play out? Sorry to stick to Bitcoin, guys. This is the weekly. How could this play out? I expect some kind of a push on Bitcoin, and I expect some kind of a mid-market crash. Now, if we're expecting October to be around about the end date of the crypto market, September, October. If you say September, you're more conservative. If we expect that to happen, the market can't just go up and up and up. It needs some kind of a cool off, like here, guys. If we go back, we had this mid-market crash in 2021. That was a reset in the market. That was a mid-market cool-off. Now, I expect exactly the same thing to happen again. Why do I expect that to happen again? I'm going to show you a reason why. It's the Bitcoin dominance. Now, we've been in an ascending wedge in the Bitcoin dominance for 2.5 years. We're popping our head back up, but the aim of the game is for dominance to drop. When dominance drops, that means the altcoins outperform Bitcoin. When the altcoins outperform Bitcoin, you get your alt season. When you get a big drop on the Bitcoin dominance, that's when you get a huge surge in alt season. Now, does that mean that Bitcoin goes down during this point? During this point here, does this mean that Bitcoin goes down? So this is the dominance of Bitcoin. Doesn't mean that Bitcoin's going down. It means that Bitcoin's slowing down and the altcoins are outperforming massively. So you've got to think, guys, when you look at the Bitcoin chart and you go back on Bitcoin, this is where the bull market started, guys. Bull market started back end of 2022, start of 2023. Bitcoin has nearly finished its bull market, guys. It's done most of its gains. It's done so far from its bottom. So far from its bottom, it's done 623%. So Bitcoin's done over a 6x already. Bitcoin's had its bull run. And when you look at that in comparison to the altcoins haven't done their bull run. So what happens is the rotation begins from Bitcoin, which has already done its gains, into something that's higher risk because it's a time in the market, guys. When the market's risk on, you go high risk, get more gains. So people have come out of Bitcoin into altcoins. That rotation hasn't really started happening yet, guys. So we will see when that rotation happens, when you get this big drop to the downside. This is why I'm expecting a mid-market crash, is because I'm expecting something to happen at this 48% level on the Bitcoin dominance. Why am I expecting something to happen? It's because of these previous resistance levels, such a big resistance level on a higher time frame, the higher the time frame, the higher the conviction, you would be pretty much guaranteed some kind of a bounce there. So what would happen if we got a bounce here? What would happen if we got a bounce here? Bitcoin would start to stagnate. Bitcoin would start outperforming altcoins. And that's potentially meaning Bitcoin's pulling back. And when Bitcoin pulls back, altcoins pull back harder. So although that the Bitcoin dominance could be going up, Bitcoin could still be going down. Just it'll go down a lot less than what the altcoins will. So that's why I'm expecting a mid-market crash when we get to this level. The other reason is because of this, guys. The big 200 weekly moving average. Now, every time something happens, every time something hits a big weekly moving average, you get a reaction. We got that reaction here during the last alt season. This is the previous cycle. Look how price reacts at this 200 weekly moving average. You get this, you get stagnation. And that's indecision between who's outperforming, Bitcoin or altcoins. Then you get the big pull to the downside. And this is the real alt season. When was this? March 2021. This was the real alt season. Then when we pulled back here, guys, that was the May crash. That's when Bitcoin started outperforming. That was the May crash. Let's go back. What happened? So we look on the Bitcoin chart. This was here. So this is the May 2021 crash. Bitcoin pulled back. We look at the dominance. What happened? Dominance pushes up. Why is that? Because Bitcoin's falling and the dominance and altcoins are falling even harder. So that's the thesis behind my mid-market crash, guys. I'm expecting a reaction at the 200 weekly moving average. I'm expecting a reaction at the 48% level. Then I'm expecting some kind of stagnation to a 3-month pullback, then a second leg. Will it play out like that? Am I right? Am I a guru? No, guys, this is just what I think. And the next thing that we're going to look at is the Dixie. Now, remember, guys, I said the things that we're at support, that we need to be at support, they're at support. The things that we need to be at resistance, they're at resistance. Now, we want the Bitcoin dominance to be at resistance. We want the dollar to be at resistance. And why do we even care about the Dixie in the first place? What is the Dixie? It is the dollar against everything else, guys. In fact, it's not everything else. It's the main bag of currency. So it's things like the Canadian dollar, it's things like the Japanese yen, it's things like the Great British pound. And then the biggest bag is the euro. I think that makes up about 25% of the Dixie. So it's all of those fiat currencies trading against the dollar. So if we look and we find that we've got a weak Dixie, that's signaling that the other fiat currencies are starting to outperform. Why does it even matter? Because people go in the dollar in times of fear. It's not going to be like that forever, guys. It's not going to be like that forever. The dollar's inflationary, Bitcoin's deflationary, and people are starting to realize that now. So we're at resistance in the dollar, and we want the dollar to get slammed. That's the aim of the game. We want the dollar to get slammed. So this is a 61.8% retracement. 61.8% retracement. Now, can you see something within this pattern here, guys? Anybody that's been watching Crypto School would know exactly what I'm talking about here. We're at resistance, and this is a 3-bar reversal. This is a strong indication that we're going to get a failure pattern. Let me go into this. By the way, guys, go and watch Crypto Class. I do this every Monday. I'm getting less than 100 views on Crypto Class. I teach you all of this, how you can take advantage of resistance, how you can take advantage of support, show you all the indicators, how you can put a strategy in place. We're only about 4 or 5 videos in at the moment, but this is my least watched videos. So I'm going to give it a try for the next couple of weeks, guys, because the people that are watching it, I've say this in the videos, the people that are watching the tutorial videos, the educational videos, the people that are self-developing and the people that are going to have a high degree of success. So like I say, I'll do those for a couple of weeks. If there's no interest after a couple of weeks, there's no point doing it. So go back and watch Crypto Class, the first 5 episodes. You'll learn things like this. At resistance, you've got 3-bar reversal. What's the psychology behind this? You've got a big pump to the upside. You're at resistance. We know we're at resistance because this is a 61.8% retracement. You know, you get a reaction at the 61.8% retracement. The middle candle, we can just zoom in here. That's your doji candle. What signal is that? That means at some point, you can read many things within a candle. That means at some point the bulls have pushed price all the way there. Now, if the session closed when the bulls had pushed price all the way there, what would that be? That would be a new higher high, and that would be conviction for the bulls and a good chance that you get a higher high for the next candle. However, it did give a signal because there was indecision here. We were at resistance, and then the next candle was a deciding candle. So this was a lower low, lower close candle, and that finished below the extreme low of the previous low. So that signaled that the bears have completely regained control at this resistance level. They've slammed price below the previous extreme low of the previous session. And then what do we get, guys? What's likely to happen on the following candle when that happens? 50% candle. Let's check this one. You often get a 50% candle on the next one. So look at that. So at some point, there's the 618, there's the 382, there's the 0.5 in the middle, 50%. So it's come back and it's tested 50%, and it happens time and time again. And that's signaling that the bulls are trying and trying, but the bears have regained control. So expect a pullback going into tomorrow on the DXY. Got that from the clues on the candlestick. We haven't even put any indicators up there. What's the indicator saying? Overbought, coming back. So that is such a strong indication, guys, that we've got a weak dollar. And that's one of the theses behind my conviction that things are going to start getting bullish very soon. The next thing that I'm going to look at, guys, this is just concentrating on the dollar. The next thing that I'm going to look at is this. This dollar is at support now. The dollar's at support, and we need it to drop this support. And what will happen when we drop this support is you'll see a surge to the downside. This is the dominance. This is the market dominance, guys, of USDT. So it's the US dollar tether, and it's the dominance within the crypto market. Remember, you look at the Bitcoin dominance. Bitcoin topped out around 62, just over 62%. What is the market cap of tether in comparison to the whole of the market cap? It is currently 3.98%. But what you'll see is once we drop this support, that's going to be a big surge in altcoins. And that's going to come back down to the next resistance, and that'll be a drop of 34.28%. Something else actually that I've seen on this, there's a trend line on here, guys, that I want to show you. So this trend line here, this trend line has actually been broken This trend line has actually been broken at the downside, and this goes back a couple of cycles, I think. Let me just check. This goes back. This trend line actually goes back to January 2018. So we've broken a trend since January 2018, and we're currently being rejected, 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 rejected. This USDT dominance looks like it's getting slammed to the downside. Now, the psychology behind this, when the when the USDT dominance, I beg your pardon, gets slammed to the downside, the psychology behind that is people are putting more money into crypto. So it doesn't mean that USDT is going down in value. It means that people are putting more money into crypto. There's more liquidity going into crypto. When there's more liquidity going into crypto, which is outside USDT, that means that the USDT dominance is going to go down because obviously there's more cryptocurrencies that are coming in. Not potentially more cryptocurrencies, but people are buying more cryptocurrencies and increasing the market cap. So that is the state of the market, guys. We want this big drop in dominance, and it's looking like it's going to happen. We want this drop on the Dixie. We've got the 3-bar reversal, and it's looking like it's going to happen. So things are looking really positive on the market at the moment. Things that we want rejected are being rejected. So I'm going to go through some altcoin requests now. Firstly, we've got ICP. Let's have a look at ICP. We're talking about ICP in the last video. Let me just get back into the daily, jump into the daily. We talked about ICP in the last video. I've got a bit of a lag on this today, apologies. And I'd said that we were in a descending channel. When you're in a descending channel, that's signaling an exhaustion. When it's signaling exhaustion, it means one thing, that the bulls are about to try and regain momentum. Look at this candle today. So since yesterday's videos, ICP has gone up 5.39% where the current candle is now. What was the aim of the game for the trade, guys? Remember, you're waiting to come up here, crack this trend, make sure you've got a good enough risk to reward, and then come back, test this as support. If you don't get a good enough risk to reward and you get a volatile spike to the upside, wait for the pullback and then bring your risk to reward down. So nothing's changed on ICP apart from we were expecting that bullish candle and we got that bullish candle. Virtual is the next thing. Look at this. We've got nothing to go by on this. This is the problem. This is the problem, guys. So let's stick a fib on here. Stick a fib on here from its swing low to its swing high. Any levels holding? Look at this, guys. Golden 618, reaction from the golden 618, sitting at $2, exactly $2. $2 is a psychological level. Why do we talk about psychological levels, by the way? We talk about psychological levels. Now, think of a trade, guys. You've done trades before. You've gone to a foreign exchange and you've said, can I change my euros to pounds? Can I change my dollars to euros? Whatever. That's a trade, guys. Now, do you go and look at a chart when you do that? Do you go and look at a chart if you go and swap money or if you swap something? Not many people do, guys. There's not many people that are traders and not many people that can check fair value. So that's why I emphasize go and self-develop and learn how to read a price chart and understand what it is that you're buying and whether it's fair value, how you can get an advantage of the market. And when the market gives you something, you can take what the market gives you at the right time by understanding that. So what I'm saying is psychological levels. If you think about someone that's on, I don't know, they're on the phone and they're on Coinbase and they don't have access to a chart, they can't read a chart. And they're thinking, right, okay, what level would be nice to buy it? They wouldn't be thinking $1.97 because that's support. They wouldn't be thinking $1.56 because that's support. They'd think $2, $1, $4, $5. So all of those people collectively that are thinking psychologically that they want to buy at that $2 level, what that actually does to the chart is creates lots of buy orders. When it creates lots of buy orders, it has a knock-on effect. You get a reaction and then it gets bought up. So you combine that, people that don't know what they're doing with the people that do know what they're doing, and then you get a double reaction because the people that are looking at that psychological number, it's often a strong number as well, which is the 618 Fibonacci number. See how these things play out, guys. Technical analysis does work. Well, it does until it doesn't. Anyway, I'll say that. Arbitrum next. Arbitrum's coming back to a strong support. Let's have a look. This is looking pretty good, actually. I haven't seen this one for a few weeks. So we're coming back to a strong support on Arbitrum. This is the strong support from this previous build-up of price action, and you can see we're currently holding. That's looking good. So what level for Arbitrum? If Arbitrum drops this level, it's holding the level at the moment. We can see that the bulls are pushing price up, represented by this wick. If the candle closed below, 62, then we're looking to go all the way down to 53. But it is holding, and if you're looking for a trade from here, that is an increase to the next resistance point of 23.95%. So from a trading perspective, that looks all right on Arbitrum. Obviously, you're protecting yourself below the previous swing low. And when you look at the Algorand chart, this is the definition of a beautiful trading pattern. You've got a bull flag here. This has got such strong conviction pushing price up to this resistance point. When you get to the resistance point, what needs to happen? What's the psychology behind this pattern? We need to pull back. The indicators are probably overbought here. Let's check. Indicators, overbought. Price needs to cool off. Now, this is probably a resistance level. If we zoom out, clues left, yep, resistance level. We can see here, resistance, resistance, resistance. So you've got a reaction, it's exhausted. The bulls need to pull back, the bulls need to cool off. So the bulls cool off, and what happens, guys? Bears regain control at this level. They push price back down as far as they can until we get to the bottom of the pennant. What happens at the bottom of the pennant? What happens? Your stochastic has reset and it goes for another turn. So we're in the trading pennant now. There's a couple of things you can do here from a trading and investment perspective. From an investment perspective, this looks good to me. We've got a reversal of the stochastic RSI. We're near the bottom of the pennant. From a trading perspective, you've got protections below the previous swing low. That's sat at 32 cents. So if price pulled back to 32 cents, you'd want to be stopped out with the least amount of capital at risk. Would you be looking for extensions, or would you be looking for trades to the previous swing high? On something like this, I'd be looking for an extension. Remember, there's different types of traders, guys. You've got your trend reversal, you've got your trend following, you've got your trend continuation, all sorts of different types of traders, guys. Elliott wave, all sorts of different types of tools, all sorts of different types of traders. Now, when I'm looking for an extension, I'm using my Fibonacci extension tool. And how am I measuring that? I'm going from the previous swing low, then I'm moving it up to the swing high, and then I'm going back down to the previous swing low. And there's two key levels that I'm interested on a Fibonacci extension tool, and that is the 1272 and the 1618. So the 1272, 93 cents, 1618, $1.11. Clues left. Can we see any resistance? Yep, we can see resistance here. So expect a reaction at these levels. Fibonacci levels, we've got resistance levels, clues left. We know we'd expect to get a reaction there. So we can monitor that, guys. If you get a breakout, that's where you're likely to go, an extension to the 1272, and then the 1618 if it's a big swing. Right, okay, Kazena next. This looks good. So firstly on Cadena, we've got an indicator that's reset. We've got the stochastic RSI that's reset. What did we talk about yesterday? Descending channel. Got this. The descending channel is signaling exhaustion. So all you're waiting for here is the break. Waiting for the break. And that's probably not going to be too long, guys. Once you've got a break here, just to this previous swing high, that is a move. 161% on Cadena. Looks good to me, guys. It is at a strong support as well. If we just clues left, remember, look at this build up of price action it's got to fall back on. What is previous resistance for such a long period of time becomes support. And if we just zoom into here, look at what kind of reaction we got from the candlesticks. Go and watch crypto class, guys. I teach you this in crypto class. These are where you can get the clues in the market. And this is where you can get good trades when you understand that you're going to get a reaction here. You've got your support lines built in. You've got your resistance lines built in already. You've got a reaction here from this wick. You've got a reaction here from this wick. You've got a reaction here from this wick. You understand this, guys. You've built into your support. You've built in your resistance. And you get clues from these candlesticks. And what's it done? What's it done here? 3-bar reversal. Big move to the upside. You've hit resistance. You've got your indecision candle in the middle, your doji, and then you've got your lower low, lower close candle, which takes out the previous extreme low of the previous candle, signaling the bears have got full control, and then you get the moves to the downside. Got H-bar next. Got H-bar. So let's have a look at this. This is quite a tricky one, actually. The thing that you've got here is you've got your 50-period moving average. So your 50-period moving average is going to be your friend. Because this is in a channel which is pretty choppy. This is in a channel which is ascending as well slightly. Have we got any kind of divergences on here? We'll just bring up our RSI. See if we can get any clues from the RSI. When clues aren't transparent, when clues aren't obvious, guys, when clues aren't that obvious, let's get this off. Then sometimes you need to add additional clues. So we're going to add in the RSI. And we're going to look for divergences. We're going to talk about divergences next week in crypto class. So what I'm going to do is just make this a bit clearer for you. There we go. Make it that should actually, it's not working. Right, okay, so you can see as price is moving up here, you're putting in a little bit of a higher high here where you've got downtrend on the RSI. So it's showing that the buy-in pressure is losing momentum. Looks like it's had a big push to the upside, and this one is a little bit of uncertainty to me, guys. If I was playing it in this range here, I'd be looking to accumulate at the bottom of this range. Bottom of this range is 24 cents. Top of the range is 39 cents. What is that? A move of 50, 60%. So if you got a trade at 24 cents, that means one thing, that you can protect yourself below the bottom of this range. So if price pulled back, limited amount of capital at risk. Next one out, Dogcoin. I don't know what this is, guys. This was a community request. So we've got Dogcoin. Wait for the break. Once you've got a break, there's one thing that's going to happen here on Dogcoin. I don't even know what this is, guys, so let me know in the comments what it is. You've got your 200, you've got your 200 daily moving average. Once you've broken trend, you've also broken the 200 moving average. Make sure that you've got a candle close outside of the 200 moving average, and make sure you've got a candle close outside of this trend line here. Once you've got that, that's signaling momentum for the bulls. Your indicators are reset. They can have another turn to the upside. And the aim of the game is to put in a higher high. So the aim of the game is to close above 0.006134. If the next swing closes above there, you'll probably come back, test this as support, and then start putting in higher highs and higher lows, continue into the upside. My Lovely Planet. I'm not sure what this one is. Exactly the same. If you look at this and you look at H-bar, pretty similar patterns, you could see indecision. You've got choppiness, and that could actually signal distribution. So if it signals distribution, that means that you could see some kind of a cool off. So how do you play it? Put yourself in a range. Wait until you get to the bottom of the range. That allows you to protect yourself. If it comes back to here, let's work this out. If it comes back to the bottom of this range, sitting at 0.45, then you take a trade, a long trade, from here, just to the top of the range. Your risk to reward is below here. Then, your stop loss is below there, and there you're shooting for there. That's 116% in a range. So would I be looking for extensions? I wouldn't be looking for extensions. However, if we do pull back to that kind of support, that's a good time to protect yourself because you can reduce your risk if you're wrong. Ultimately, you're wrong when you come back, get stopped out. Right, XRP. Let's go over a couple of ones from yesterday. See, XRP, we're in this accumulative range. We need to break out of this accumulative range, and that's going to show when the bulls have got a little bit of control. Stochastics come all the way back. That's positive. We've got the flag up here. Sorry, we've got your flagpole here, and then you've got your bull flag trading in between this bull flag. Now the indicators have reset. Indicators are reset, and we're at resistance. Sometimes that can be a strong thing because that means once you've got a push up, there's a good chance of breaking through. So that's what I'm looking for on XRP, guys. I want to see that break before I can get any kind of predictions going forward. It's quite an unusual XRP because you've got a big bearish divergence here. Look, you're putting in a big higher high, you're putting in a lower high on the RSI. So that's something to be concerned about. However, Bitcoin does this time and time again, guys. You see Bitcoin putting bearish divergence on higher time frames. You see Bitcoin putting in ascending channels. When it's anything else other than Bitcoin, that's signaling one thing: exhaustion, exhaustion, exhaustion. Bitcoin just doesn't care about exhaustion sometimes, guys. When it gets a drive of narrative and when it gets a liquidity, when it gets a lot of liquidity chucked into the market, no matter what kind of pattern you've got on the chart, it will just go up. Right, Cardano. We talked about Cardano yesterday. It dropped this bull pennant. Aim of the game is to get back into this bull pennant. It's trying again. You can see it's rejected once, it's rejected twice, and it's trying again for the third time. We want a big push up here, and we want a big push above the 50-period moving average. If we can get back up to 98 cents and close the day at 98 cents, that's going to look strong for Cardano, and this would look like a fake out to me. Get 50-period moving average, that would then flip support, and you can have another turn. Indicators are at the bottom, guys. Indicators are near the bottom. So that's good. Then ICP. ICP. So we talked about this yesterday on ICP. Just wait for the break. Wait for it to break the 200 period moving average. Oh, we've talked about ICP already, actually. We looked at ICP. So this is one, actually, that I wanted to show you. This is probably one of my 5th or 6th biggest holdings. This thing has absolutely skyrocketed. I've done about 30x on this thing. This was in the Bullseye portfolio, and I paid $99 for it. I think it's worth about $3.5 grand now. So that's what crypto can do with a small amount, guys. When you've got a diversified spread and a diversified portfolio, I just put $50 and $50 and $50 in the Bullseye portfolio. What's it looking like now, actually? Let's have a quick look. So we've got, let's have a look. Such a lag. Right, we have got 24-hour change, $872 on the day. That's a 15% up on the day. That's total P&L, 3,708, 79% up on the portfolio, worth 6,698. So this was a side portfolio that I just done in front of you guys, just to show you what crypto can do. This is what crypto can do, because look at this, Onyx coin. Put $99 in there. It's gone up 2,760%. It's now got P&L of $2,733.20 plus my $99 that I put in the first place. Doesn't happen all the time, guys. Look at that in comparison to second place, 199%. So you've got a 2x there, you've got a 5x there, you've got nearly a 1x, you've got a 3.5x, but some of them $50, some of them are averaged down, so some of them I managed to put $100, $150 in. Where can we chat with each other, guys? This is not a calls group. This is a place that we can chat with each other. I don't know what these guys have been going on about this morning, but a couple of great lads, Aqua Hat, none the wiser. Get yourself in there. It's completely free. You can chat to some people. It's all about having a community of like-minded people. And I tell you something, these guys come up with some alpha sometimes. Next, we're going to look at Leah AI. This was a request from one of the community members. This is going to be quite a difficult one. This one isn't available on TradingView, so I've had to go on to DEX tools for this one. And I would say there's not much analysis to go by, but I would say you're at a strong support. You're at a strong support here. Come back down. That was resistance, and it's pulled through, and that's nearly acting as support. So don't know what this thing is. It looks pretty high risk if it's not on any of the exchanges. 0.008404 would look pretty good to me. And then if that fails, you've got 0.005030 to fall back on. Crypto bubbles, what's today looking like? Looking strong. See, what I said was don't panic during yesterday with the FOMC. The damage had already been done. Nothing happened yesterday, guys. There was going to be no driving catalyst. The only time that we would have got a driving catalyst with FOMC yesterday is if Jerome Powell just come up and went, scrap it. I'm just cutting the market 0.5, scrap it. I'm cutting interest rate 0.25, sorry. And then the market would have reacted positively because the market didn't know what the market had built in, that it wasn't going to happen. So if something went against what the market had built in, then there would have been a surge. So there's no way that Jerome Powell is going to create this narrative. There's no way that it's going to create it. Right, I think that's pretty much enough for the day, guys. One thing I will say, thank you to all my subscribers. I've just hit 8,068. It's going up quite quick. I want to try and get to 10,000 before April. So help me with that. Get yourself on a crypto class, guys. There's only 4 videos on here so far. I'm going to be doing the RSI going into next week. But what it does is it creates a flow. Show you how to add trend lines. I show you how to read candlesticks. Show you how to know exactly when something's at resistance, when something's at support. I show you how to identify that through candlestick patterns. Show you how to add indicators to get additional confluence on there. And it goes through step by step. And I'm going to continue going through step by step. But you guys have got to watch it, and you guys are going to have to share this content because I'm only going to do it for a couple of weeks. And if I don't get more than 100 views, 200 views in the next couple of weeks, I'm going to have to move on because ultimately I'm here for you guys. And if you guys don't want tutorials, you guys don't want education, then I'm going to have to do something else. Right, the last thing we're going to look at is the NUPL. Remember the net unrealized profit and loss. Now, the NUPL indicates when the market is completely in euphoria. It indicates when Bitcoin and everybody that's holding Bitcoin is pretty much all in a profit as far as P&L is concerned. You see the Bitcoin price is in euphoria and greed, but the NUPL is in belief and denial. So we've still got a way to go in the new pull, and that's good. When you can tell when there's a market top, look at this, guys, market top, market top, market top. Every single time the new pull is called the market top. So when it starts going into euphoria, that's when we need to start worrying, is what I'm saying. Right, okay, fear and greed. You can see yesterday, what are we, 72? Today, we're still greedy. We're not in extreme greed yet. We might have a little bit to go there. Markets do look overheated, guys, but we'll see what kind of drive and catalyst we get. We'll see what kind of news event we get. I think that's about it from me. I told you you'd probably get bored of me by the end of the video, guys, because I get bored of my own voice sometimes. But subscribe to the channel if you think any of this was useful, and let me know in the comments what you think. I'll see you in the next one.